once we have, so we get to the end of the period, we have balances in those ledgers for each of our accounts. We can summarize those balances on a document called a trial balance, okay? So the trial balance has all of the accounts listed, any account that has a balance on it, and then its balance, either a debit balance or a credit balance. So again, if you have to create one of these and you already have a ledger, it's not hard. All you're doing is taking the balance from the ledger and saying cash has a balance of 2,065 on the debit side, and so forth. So this is a trial balance. I want you to think about the fact that if I have a trial balance, at that point, it's super easy for me to create my financial statements, right? A balance sheet, which summarizes assets, liabilities, and equity. Well, I've got all my assets together. And then my liabilities. And then my stockholders' equity accounts, all in one place with their balances. So in the old days, again, what accountants would do is they'd get to the end of the period, they'd summarize all of those balances in a trial balance, and then they'd prepare the financial statements just based off of that. Now, again, in the computer, I can just say, reports, give me an income statement, give me a balance sheet, and it'll spit that out for me. So they're always in this order, okay? Assets listed first, followed by liabilities, followed by stockholders' equity, then the dividends account, then revenues, then expenses. Always in that. And if you think about that, I call that financial statement order. Okay, we have our balance sheet accounts all together. Dividends are on that statement of retained earnings or retained earnings summary that we learned about, and then revenue and expenses are on the income statement. Okay, so they're always in that order. I don't know if it tells you that anywhere, if that's like some unwritten rule you're just supposed to pick up on, but that's how they're always done.